So, good evening, good evening, and it's time. Let's get to TradingView. For those that don't know, TradingView is a charting platform, not chatting like WhatsApp, but charting, CHARTING. And that means it's the platform you could use to view data previous from um from previous years, previous points in time, and use that to make your trading decisions. So tradingview.com is the website. You could go over there, create an account, and okay, we have some writers today. 1 second. Yeah, so TradingView allows you to see data from previous years. You see this is Bitcoin over here. Um, let me clean this up a little bit. Yeah, so you see we have data on Bitcoin all the way from 2018. Um, Bitcoin actually has been in existence since before 2018, but there's this issue with TradingView that doesn't pop up data for I think 500 bars or so. Don't worry, it's just saying that they want you to pay for the premium package, but that's not compulsory. Um, 1 second, let me just mute everyone. Yeah. So, getting started, TradingView has a lot of features available in itself, and you have that over here. You see that here on this left hand side. These are all tools you use while trading. You can experiment with as many as you want in your free time, but in the end, you might not need all of them. Depends on you. Everything there is useful, every single thing. So these tools, excuse me, yeah, these tools are what you use to make your analysis, your technical analysis. Over here, you have the name of the pair. See, this is Bitcoin USDT, and this in here are the time frames. So you have the 15-minute, the 30-minute, the 1 hour, the 4 hour, the daily, and the weekly. What this means is each time frame corresponds to a candlestick. So what they're saying is, if you choose the 15-minute time frame, you can't hear anything. Can everyone else hear me?
Yes,
Yes,
I can
boss.
hear you.
Okay. So Emmanuel, probably it's your network. Yeah. So up here, this means that every single candlestick you see corresponds to this amount of time. So we're currently on the weekly time frame, and that means that every candlestick you see would correspond to 1 week. Let's see that. Let's come over here and pick this big green candle. You see that's 9th of March 2020. The next one is a week after, 16th of March 2020, and it just keeps on going that way. All the intervals are the same. It's the exact same amount of intervals on each chart. So if you come over to the daily charts, you see that everything now is separated by a day. And what happens is all this data is aggregated. It is added, put together, and combined into a candlestick. So you can have 7 days in a week, and that means that you have 7 days of candlesticks all put together into one weekly candlestick. And you have you have 24 hours in a day, and you have 4 hour candles. You have six of those 4 hour candles. So that means that on the 4 hour time frame, you have six candles, and when you add them up together, you get the single daily candlestick. So that was covered in the candlesticks class. The link was shared in the WhatsApp group, but I'll share that again after the class. So that's just a brief recap. Over here we have the types of charts. Here's the line chart. What we're currently on, that's shaded slightly blue, is the candlestick chart, and there are others as well. You have the bar charts. You have a second. You have bars, hollow candles, Heikin-Ashi, line, area, baseline, and so on. You just choose what works for you and go with it. But candlestick charts are the most popular. And when trading, you're trying to see what everyone else sees, trying to take advantage um of the commonly shared view, because you don't want to be trading on your own. You don't want to be using your $50 or $5,000, because I get that their bosses here, Biko Nuvex. You don't want to be using just that your small amount of cash, which is not small, because you have $5,000. I'll call you my Oga. Oh. You have $500, you're still my Oga. You have $50, you're my Oga as well. $5 to go. But yeah, the thing is, you don't want to use just your limited amount of funds to be trading against everyone else. That's because the market is moved majorly by volume. When there's a large amount of volume, let's say you have someone who has 5 bitcoins and you have someone else who has 50,000 bitcoins. If you go to the market, who will buy more things? The person with 50,000 bitcoins, because that person has more money, so he can move more. He can, when he's leaving the market, you'll have more trailers, more containers following him than you with 5 bitcoins. So volume is very, very important. And volume appears, or volume can be counted on to appear at those specific points. That's what technical analysis tries to embody. How to find those points where the big boys or the money makers, money movers want to get into the market. So that's the purpose of all these classes, to identify these points and join them to make money. There's this thing, the first technical analysis tutor I had used to say this. He'd be like, um, the big boys in the market are the ones that have money. You can be the boy of these people and still make money. Because when you drive the big man around, you get to attend the same meetings that he attends. You're privy to most of the information that he would get, and then, kaboom, you'll be able to take the same amount of deals that he does. Whether you have limited funds or not, you'd be making the same profits he'd be making. So getting into it for today, we're looking at patterns. And last week, or rather for the previous class, we spoke about a few patterns. We spoke about the head and shoulder pattern, right? I'm sure you remember this. This is the head and shoulder pattern. This over here is the double top pattern. We have the double bottom. And what's important for these patterns are the what's important here is the neckline. Remember we spoke about the neckline. And what is the neckline? It's this region over here. Let me use a different color. This is the neckline of the double top pattern. You notice here, tops. Sure. The class is recording, so yeah. Down here, these are the bottoms, the two bottoms. So that's a double bottom pattern. This is the neckline. This is the head and shoulder pattern. This is the left shoulder, this is the right shoulder, and this is the head. This over here is the neckline. So for these patterns, what happens, or rather, what's the point of interest for everyone is when the neckline gets broken. Because once that happens, we'd be having significant price movements. And that's what we'll try to get in on. So, how do we take advantage of things like that? A strategy to use when trading is called the break and I said retreats, break and retest. The break and retest strategy simply means that you're waiting for a significant level to be broken out of or into, and then you'd be taking a trade after it retraces. That retracement is called the retest. Let's look at this for example. Remember, the neckline is the place of interest. The neckline is the place of interest. So you're expecting that once the neckline is broken, you're waiting for a retest. The retest is the retracement. And once this retracement happens, what do you expect? Continuation to the downside. This is how the double top pattern is traded. If by any chance you missed the top over here, remember I said that at this region, you can begin to watch out for what? Candlestick patterns. So candlestick patterns like the evening star, the doji are what you'd be looking out for in regions like this. So you can get a very early entry. If you miss this, the break and retest is the next safe zone. But if you'd like to get in the middle and you're willing to take the risk, there's also no issue. The break and retest is useful because it is highly likely to play out. It's um it's a safer way to get into the market with a lesser chance of a drawdown or a loss. So let's head over to charts and look at a few patterns. Let's see where they played out. Last week on the class I was trying to show this. Let me use a different chart because this one has some analysis on it already. Let's see. Bitcoin USDT. One, and I'll also say this again. You do not need to know too much. People make killings from the market just knowing support and resistance. I can personally say because from my limited experience, Biko, I suffered, and I'll say it again, I suffered trying to learn everything. Really, because when you try to learn everything, when do you actually have the time to practice everything? So it's best to pick up one thing and then stick with it. Is it nice to have the knowledge? Yes, but find what works and just go with it. It doesn't have to be complicated. And you could be doing 17 different kinds of mathematical calculations to come up with an entry for your trade, and someone else just looks at the chart, waits for a retest, and gets in. Different approaches, the same result, make money. Yeah, so let's go with this. So let's draw a trend line over here. This is Bitcoin from 2016. So if we were to draw a trend line over here, remember a trend line is valid, can only count it after you've had two touches, two consecutive touches. So here we have the first touch and here's the second touch. Upon the third touch, this is where a trade could have been taken. Now, what do we have at that zone of the third touch? Let's check it out. This region over here. What could make us take buy trades? Why would we want to buy at that region? Remember, the double bottom pattern is a bullish pattern, meaning that it indicates buyers getting in. What else? Candlestick patterns like the doji or the morning star are also really good. Then we have the two candle pattern, which is the engulfing bar, the engulfing pattern. So over here, do we have any of that? Do we have any of that available? Let's zoom in and see. We have to clear this now. So over here, what do we have? First off, as you see, we have an engulfing pattern. Exactly, an engulfing. So we see the engulfing, right? That's a bullish indication, isn't it? So an engulfing pattern shows bullishness. Now, what else? What else do we have? Nothing else is really clear over here. All we do have is the engulfing. So let's do this. So remember I said that there could be various methods by which you enter trades with this engulfing. You could choose to enter at the open over here, at the open of the wick or the open of the candle itself. You could choose to target 50% for really nice snipes, or the close of the candle. This is now where you begin to fine tune and find precision entries. Over here, let's see, let's Fibonacci. So if you are chosen to get in at 50% of the engulfing bar, over here, this is it. Your entry would have been at $3,386. Let's imagine your stop loss was below the close of the wick, or rather below the wick, which is over here. And then your target was what? Remember, third touches are explosive. When a when the market touches a trend line, you have a line of this manner. First touch, second touch. At the third touch, it is usually very explosive, meaning that you have a considerably bigger impulse at the third touch of the trend line. So whether or not it's a bigger impulse, excuse me. Let's say your target was just, you didn't want to be greedy, three times your risk. So you set it at 1 to 3. So roughly this. Would that have been a successful trade? Yes. Now, it's advisable to hold moon bags, Abi. Yeah. So if you had held this for this long, these could have been potential take profit targets. So you have this. From here to here is a 1 to 18 risk to reward. You see this? That means you're risking how much? From 3,385 to 3,156. That's $200 plus dollars. You're risking $200 to make how much? At this high over here, this is more than double. So you bought down here, you'd have made 18 times what you put in. If you entered the trade with $10, the distance between your stop loss and your entry was $10 in total. You'd have made $180 from holding this trade, and that would have been it. It would have taken you how many weeks? This is 14 bars, that's 14 weeks. If you held the trade for about 4 months, 18 times profit. So that's just an example. That is not how it will always be. That is not saying that you would consistently make 1 to 18 risk to reward ratio on your trades. This is 1 to 18. This is 1 to 22. And over here at the most advisable take profit level, you have a 1 to 36. So would you always get 1 to 36 risk to reward on all your trades? No. Would trade setups always come this perfect? No. That's why risk to reward is important. Because this means that if you win just this trade, you have to lose 36 trades with this exact same parameters for you to lose all the money you've made. So risk to reward should not be undermined. This is one of the ways to see the importance of that. If you lose 35 trades in a row after this, that is your win rate is just so bad, and you lose 35 trades in a row, you still would not have lost all the money you made from this trade alone. How to calculate risk to reward ratio? Okay. Let's see. So let me pull up a calculator over here. Can everyone hear me? Yeah. So let's see. Let's say over here we have this. You're risking $200 on a trade, and your aim is to get $2,000. Yeah, so you're risking $200 on the trade to make $2,000. So your risk is 200. Your reward is 2,000. That is 200, or rather 2,000 divided by 200. That's for every $200 you're risking, you're making 2,000. That is a 1 to 10 risk to reward. That means if Bitcoin is at, let's say, 25,000, over here, and your stop loss is at 24,000. Your take profits is advisable to be at least one risk to reward away. That means between 25,000 and 24,000 is $1,000. So that means your least take profit should be at 26,000. But even this is not totally advisable, because that means you can win one trade and then on the next trade that you lose all the money you made, because it's just a one-to-one. But if your risk to reward is 1 to 2, that means you're risking 1K. You're risking 1K between 25K and 24K. You're risking $1,000 and you're making $2,000. That's from 25K to 27K. One second, please. So this is just all the mathematics to it. TradingView makes it a lot easier by having the tool over here. You see this? That is the long or short position. So we're buying, so we're going long, bullish. If you're selling, we're going bearish, down. So long position over here at 25K, stop loss at 24K, and then target at 27K. This is 24. Okay, this is 24K. So you see roughly the values aren't exact, but you have this. You see this is 2. That's the risk to reward. And we covered that on one of the previous classes as well. So I hope it was recorded. If it wasn't, we move. We'll just look at it sometime later. So back to TA. We've been able to see one of the applications of the engulfing pattern. And how did we do that? We combined, first off, trend line support. And at trend line support, what are we looking for? We're looking for confirmations to take the trade. We had an engulfing pattern. That was the confirmation. And then after you have the reason for the trade, this to serve as the reason, and then you have to work out the entry. All that matters is your entry. I could have bought Bitcoin at 16K, and right now I'll be in profit because it's at 24K. But what happens if I bought at 3,005? I would be more profits, unless you're over leveraging on 16K position. But what matters is the entry, and that's what we try to fine tune using the 50% of the engulfing candle back there, of the bearish candle that was engulfed by the bullish candle. So let me clear this up. Let's see. Patterns. Let's look for a double top pattern. Let's look for tops. It's always advisable to do your technical analysis from a higher time frame to a lower time frame. That is called top-down analysis, starting from a higher time frame and going lower to fine-tune entries. So over here, with this, all this was done on the weekly time frame, as you see over here, weekly time frame. This engulfing pattern was found on the weekly time frame, but the entry can be fine-tuned to even the 4 hour, the 1 hour, and if you're looking for really mad snipes, the 1 minute. But pretty cool. That is stress. Just pick your position and then wait. So let's see. Tops. Where are the tops we have? This is a top. Yes. This over here, reasonable. This as well. We have this as a top. We have this as a top. Where else? So let's just use these for now. And remember, at double tops, we're looking for signs of rejection patterns. So let's start off with this one over here. When market got here, did we get rejection? Yes. You see this week over here, that's rejection. So in the region of the double top, we had rejection, but it was not sustained. You see that we didn't get a, excuse me, we didn't get a break of the neckline. And where would the neckline be? This point over here. Down here would have been the neckline. So the trade could have been taken if something like this happened. A top, a second top. If you had watched for reversal patterns here, you could have gotten in early. But then, if you had gotten this, a break, a retest, please, only Perma bears are looking for this. Bitcoin isn't looking for downside. It is not advisable to, how do I put this? Can we get short opportunities? Yes, we can. Is it advisable to hold on to short opportunities all the time? No, it's not. But why did I say so? It's because of this. Remember we spoke about market structure. Market structure, the market making highs and lows. So this is an uptrend structure. Market is making higher highs, higher lows, higher highs, higher lows, higher highs. In a downtrend, the market is making a low, a lower high, a lower low, a lower high, a lower low, a lower high. And that is how a downtrend is established. But we see that Bitcoin is in a bullish trend. We see over here, this is a high, a higher low. And now we've made a higher high on Bitcoin. A correction is something to look out for. But you don't want to be shorting Bitcoin right now until it's at least confirmed to an extent. Because all this region over here has been untested. This is uncharted territory. Bitcoin has never been this high before. We're in the middle of making history with Bitcoin and no top has been found. So it's best to just keep on longing Bitcoin if your mind permits you. As Jerry would say, um, you need the mind of a ritualist. Jerry, yeah, when you sent that to me, I was like, God, that's crazy. Yeah, so you need the mind of a ritualist at this point.
Your mind needs to do your back.
Yeah, so it's advisable to long Bitcoin. It's always advisable to long Bitcoin because we like Bitcoin now, but be cool. Apply caution. Trade with stop loss. I remember we were joking on the class one time when Bitcoin was around 17, 16K, and we're like, buy Bitcoin, buy Bitcoin. And last, Bitcoin's at 23K. Who bought Bitcoin? Come and tell Bitsy thank you or unnecessary. Let's move on. So, if the market is in a downtrend, what are we looking for? We're looking for double tops. We're looking for evening star patterns. We're looking for anything that will just indicate that the market is going down, 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 down. A double top signifies a downtrend. An evening star pattern. Let me see if I can draw that real quick. The evening star looks something like this. Bull candle. Let's just find it on the charts. Since we're on the live charts, let's do this. Okay, so let's see over here. This here. Market was bullish. Here, market created a doji. Remember dojis? And then the next candle had a lot of sell volume in it, but managed to close bullish. Remember I said the color of the candlestick doesn't matter. What matters is what price says. So over here, you see that price showed already that sellers came in. It was very, very evident. All bulls could manage to do was close slightly above entry. And what happened on the next candle? A massive drop. Now, this coincided with what? A double top. So if you found this pattern at the double top region, what would you have been looking for? Sells. And that's just it. What could have your entry been like? Let's say for the engulfing pattern, let me draw this real quick. Give me a second, please. You have this. this. Okay, and let's say a doji in between. Yeah, so this here is what an engulfing, or rather a perfect, what's it called, evening star pattern would look like. Let me put in the colors. Okay, it should be green, then this should be red. So if you were to take a trade with this is the neckline. As always, you could take a trade right off of here, stop loss above, and then, okay, this is a long position. I'll have to switch to short position here. Yeah. So if you had done this and targeted, let's say 1 to 3 or 1 to 2, you'd have something like this. So now let's see how that applies over here. We're looking at this as our as our evening star pattern, rather. This over here. This. So where's the neckline? Over here. What matters is the story. Remember that. Price is showing rejection from this region, from our point of interest, from a key level. Remember, key levels are support and resistance zones. So over here we have rejection. It is evident. See, look at this. Remember I said volume pushes price and candlesticks show volume. From here to here, we see the candlesticks got bigger. That was an increase in volume. And then price began to lose steam over here. Price is losing steam, price is losing steam. And then we have a confirmed loss of steam at a double top, a resistance level. So now what we're looking for is what? Anything to help us short. So what's next? We have a candlestick that shows what? Sellers are present. Buyers tried to get in, but they were very weak. Look at how small the candle is. So what happens next? We look for how to enter for shorts. So let's see. If we had chosen just the bottom of it and chosen to sell, what would have happened? Short position over here, targeting 1 to 2 or 1 to 3. Okay, so if this was what we had, then our target of 1 to 2 would have been hit. Now, could we have fine-tuned this a little more? Possibly. Remember, 50% of the candlestick. And all this is on the weekly. Now let's do this. Okay. Let me highlight this and then we go down to a lower time frame. Remember the pattern here is the evening star candlestick pattern. When you now move down to the lower time frame, what do you see? Left head, left shoulder, head. This looks like what? A head and shoulder pattern. It's, oh, excuse me. This over here. Head and shoulder pattern. So on the weekly, we're seeing what? An evening star. Here we see a head and shoulder. What is the head and shoulder entry criteria? So it won't look as though we're trying to force anything here. This is the neckline, right? What happens when we get a head and shoulder pattern? Remember, the criteria is once this is broken, we wait for what? A retest. What happened at the retest of the head and shoulder neckline? We got a drop. So we see 2 trades already from that. Now, look at this. If you were to catch the head and shoulder as it formed, because remember on the weekly we had the evening star as our trade criteria. So we're looking for where to enter short positions. So now we have this. We see, let me put this on replay. Okay. So over here, the market was just printing this. We had only the idea that it could form a head and shoulder. Why? You could see this. So we could have been anticipating what? A head and shoulder formation, and then we would have been looking for cells around here. So what do we do? Remember, this is a double top. We've noticed that that is a resistance zone. So we'll be looking for cells in this region. And what does it else? What else do we see? It coincides with a head and shoulder location. Um, so if we were to have a perfect head and shoulder, that is where it would have ended up at. So what could we have done? If you trade institutional levels, you'd see this as probably another flow level, a retrace into this, and then a drop. All that is just extra information, not completely necessary, because we've already seen already, without looking at institutional levels or OTE or what else, all the English big grammar only should help you build your mindset towards what you already know. Support and resistance is what helped us here. Double top, engulfing. You don't have to complicate it. So in here, in this candle, it doesn't engulf, but it's a resistance zone. So what happens next? Let's see. Let's play now. What happened? Price moved in there, and then what did we have? A drop. So you see that we went from the weekly time frame, seeing an evening star pattern, into the daily time frame, and we got what? A a head and shoulder pattern. If we move down to the 4 hour, let's see what we have. Yeah. So on the 4 hour, what do we have in here? What could have made us take that trade? Let's see. Let me clear this up. Yeah. So we have this. We have the pattern we're looking at, the head and shoulder. That's just it. So how could we have entered this? Over here, trend line. Trend lines are useful as support or resistance, but a trend line breakout serves as a reversal setup as well. So price bounced on a trend line, bounced, and then it broke through. Just indicates that the trend line can hold again. When support or resistance is broken, what happens? It becomes the inverse. So all we had was a drop. Could have gotten an entry here. Excuse me. Could have gotten an entry at the break of the trend line. Stop loss at the top. And where's our minimum target? Down here. That is to make the head and shoulder pattern complete. And then what would have happened? What would have been our reward on that trade? That's 3.95. If we had gotten that and all went according to plan. Then after that trade was taken, remember, we were catching the formation of the right shoulder. So if we're looking for a trade, or rather a safe trade, it would have been the break of the neckline and the retest. Where's the neckline? Over here. So after catching the first move down, we could have caught the retest as well. break of neckline, this is the neckline, breakout, retest, then another drop. So these are the things that we look out for consistently. Can you use long or short position tools to get our entry price? Anywhere you drop it, it's adjustable. So all these buttons, the widgets by the side, you just to adjust. So when you check it out at the far right, you'd see the entry and rather the prices. Here is the entry price. In red is the stop loss price, and in green is the take profit price. Yeah, so I hope that's clear. If that made sense, could you just drop a message in the chat box? Let's see if we can do one more, and then we'll be off for tonight. Gotten, that's great. Okay, so while we're here on the 4-hour time frame, who else notices a bottom? Remember I mentioned on the previous class that bottoms don't have to be single. It doesn't have to be double rather. Could be triple, could be quadruple, could be up to 10. But all that it indicates is this, that price is finding it really hard to break through that point and is likely to not break. Or if we have a break, it could just be false, and then we have a continuation. So whatever number of bottoms it is, all we're waiting for is a break of the neckline and a retest to do what? To go long. Okay, Prudent. I didn't get your question. Please, could you repeat that? Yeah, so while we're here, on the 4-hour time frame, what do we see over here? We see equal lows. What you call here a double bottom. So where's our neckline? Where's our neckline? We could safely say this is our neckline. Let me just clear the charts. Yes, so starting here, we have this. It dropped down here, we pushed up here, they had to drop again, and then we had the rise. So where's our neckline? This point here. That means we're waiting for what? For a retracement there and we can buy. What happened next? Retracement, buy. Did price buy from there or not? Okay, we're still on the uptrend. Sad. But we see that's just how repetitive price is. All you have to do is understand the concept and then repeat them over and over and over again. Now, what else could have been a confluence for this? Remember this over here was resistance. It got broken and became support. Confluence. Other things to just help take trades. So we see this repeated everywhere on charts, and that's why technical analysis is possible, because we can now note all these things and put them to use later on. So currently Bitcoin is bullish. Bitcoin is extremely bullish. Should we short if you want to try to catch a falling knife? So what's the next plan for Bitcoin? A retracement is nice to have, yes. So if we have a retrace of this kind, to just incite more confidence to go long. Why is that? This region over here is highly likely to be a support zone from before. Let's see that. Okay, so we see this point over here corresponds to the previous high of Bitcoin. Remember, when resistance gets broken, what does it become? That was tested as resistance. Here, we had a slight drop and then we broke through. So, what's the game plan? This was previous resistance, and now it is likely to become support. I never said it will become support. No, 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 no. Nothing is certain. We just try to make use of the probabilities that we have present and take well-meaning guesses that will provide money. That will provide urgent 2k. Yes. Until I make urgent 2k, I beg nobody should call me boss. Sorry, until I make urgent 2k in a day or in my entire life, nobody should call me boss. Thank you. I appreciate it. So over here, what are we watching out for? A retracement to this zone that was of previous resistance. Remember the pattern we just saw down here? Where is it? Yeah, here. The double bottom scenario that we had on the 4 hour. Where were we? Where was that? I'd say somewhere around here. Okay, this is likely to be a different one, but it's still the same concept. Let's see. Price hit here, rose, dipped, rose. Now, this is the neckline. We test up the neckline and then we move. Let's see. What happened? Price retested the neckline and moved. So price repeats itself. I don't think that's the exact one we looked at just now, because that one had, I think, a triple bottom, but okay, yeah, this is it here. This could also be used as an example. But what I want you to notice this. Price tested here as resistance first time, resistance second time, got broken, got retested again, and then we moved. So what's the goal where the market is currently? We're trying to bring what has happened into the past and what's happened in the past and bring it into the future. So the market has tested here as resistance first time, second time, and now we broke through. So what's the goal? When we have a retest, it would be safe to buy. So for now, any buys you're catching, buy, hold stop loss, buy, take profits, because it is likely to see a dip to the 19k region again. Nami Toka, no, it's what the charts have said from before that are likely to play out again. So we'll be watching this zone over here. Remember, support and resistance is zones, they are not lines. So trying to catch what happens when market comes to this zone again. And remember, it lines up with this trend line support. So anywhere within here is a viable region to long Bitcoin. So between 18.9 and 19.8, that's a very wide range. So you now have to narrow it down to your lower time frame and now begin to look for things like double bottoms or engulfing patterns over here to take long positions on Bitcoin around this region. Or you could just set a buy order at 19.8 and then set maybe a $1,800 stop loss. Depends on you. But let's try to minimize risk, because so I'll be trying to long Bitcoin to be within this region, because it's a region of what? A region of confluence. Did I say sell Bitcoin? Biko, try no hear back of television. No, it is not advisable to sell because we are currently very bullish. But if we have a retracement to this zone, does it change the fact that Bitcoin is bullish? No. Why? Market structure. Remember, the market structure is currently one of an uptrend. So high, higher low, higher high. You can get a retracement here to be a higher low. You can get a retracement here to be a higher low. You can get a retracement down here to be a higher low. But as long as here isn't broken, we are still safe. So the first likely region of reaction for buys is up here. And that's what I'm expecting on Bitcoin. If you take the analysis and Bitcoin now goes from 19.8 to 29,000, try one giveaway. Yeah, so that's basically it. If you have any questions, let's take them for the next few minutes and then we'll be done for tonight. Okay, on the use of time frames, what time frame would likely be profitable for a scalp trader? So we have kinds of trading, or rather styles of trading. You could have scalp trading, day trading, that is intraday trading, and swing or position trading. You could argue that position trading is longer than swing trading, but tomato, tomato, potato, potato. Yeah, position traders are traders that hold positions for years, centuries, eons, if they are alive. Imagine someone buying Bitcoin at $50 and holding till now at 28,000 or 23,000. That person is a mad position trader. Ah, that kind of person needs serious hands before really. That's an idea of how long position traders hold their trades. A swing trader could have taken the trade we spoke about, the trend line trade down here. Remember this one, the one that we found over here that was gotten by the double bottom, rather the engulfing pattern in this region. So a swing trader could have taken the trade from here and held till the take profits over here, here, or here were hit. And we saw that it took 14 weeks. That was about 3 months. So that's an idea of what a swing trader would take. But a day trader is looking to take trades within the space of a day or two and close out. So something like this. Um let's see. Resistance, resistance, double top, break, retest. This could have been a failed trade. Look at this. I will not show you only perfect trades. This could have been a failed trade because you got in here, market sold slightly. If your stop loss wasn't an entry, you'd have been kicked out. Yes, it happens. But that's why we have risk to reward. I would not say that every trade you take will be a winner. I'll be lying. Not every trade I take is a winner. No matter how well I want to sweet mouth it, no, it's not. But we try to reduce risk by using confluence. When there's confluence, there's greater probability of a trade playing out. So, over here, a day trader could have taken this position. A break and retest of this. Belong here after a day, take profits. Profits could be minimal when there is no volatility because between here and here is barely 10K, barely $1,000. This is 10,000, this is 11,000, barely $1,000. But over here, very recently, Bitcoin has been doing $2,000 in a day as if it's nothing. So day traders could just open positions between a day and close out. Then you have scalp traders. Scalp traders are people who are looking to make very quick money from the markets, just get in and get out after less than a day. So you're trying to get in and get out real quick, trying to take advantage of small price movements. Maybe price moves from 16,000 to 16,002. That could be a scalp trade, and you want to do that on lower time frames. I've been showing, or rather, we've been doing analysis on the weekly, daily, and the 4 hour because I prefer to position, or rather, swing trade. Day trading, unless there's a lot of volatility, messes up my trading because I'll be trying to take profit real quick and then maybe I don't set my stop loss wide enough or whatnot. Just depends on what works for you. So I prefer to hold trades longer. A trade like this on the 4 hour could take days to play out. Let's see this for example. Okay, here. Over here, we had resistance, resistance, broken out, retested. A day trade could have been taken here, entered at 15,850 and closed on, what time is this? Let's make use of time as well. So we see here the retest happened on the 14th of November. So you took the trade on the 14th and you closed out after a week or a day or two. You'd have entered at 15K, closed 15.7, closed at about 16.7, 17,000. That would have been a day trade for a few days. But holding till now would have proven to be a swing trade. So, for scalpers, it's advisable to use very low time frames because you're trying to take advantage of quick reaction in the markets. So the 1 minute, 3 minute, 5 minutes, 15 minutes, 30 minutes, 45 minutes. You could use the 4 hour, the 1 hour, and so on to build your bias. Like now we've found Bitcoin here at this is the level we'd like to buy from. So on for scalpers, you'd now be waiting for price to get into this region and looking for very quick ways to get in and out of the market. So you'd move down to the 15 minute, the 30 minute, the 5 minute, the 1 minute to look for reaction. And you can still use the same principles of price action of break and retest to get your entries there. You can begin to look for double bottoms on the 1 minute. It is not advisable because it is highly likely to fail. But when you have a region of interest, it is a lot easier, it's a lot better to look for those things there. Having your points of interest, your key levels is very, very, very important because it saves you from entering in the middle of the road where there's almost no confluence to take your trade. Yeah, so I hope that answered your question. Can one use only candlesticks to trade? You could trade based on candlesticks only, yes, but um, remember we're trying to get the trades with the highest probability of playing out, and that's why we combine candlesticks with other forms of analysis like trend line support and resistance and so on. Okay, so how do you know where exactly you were when you switch time frames? Because when you do, it gets confusing, everything scatters. Okay, you could do this. Over here, there's the um, vertical line tool. Let's say you're looking at the 23rd of November and you don't want to go below or beyond that. We're on the 4 hour chart now. So on the 1 hour, when you move over to that region, you see the line there. So you won't be completely lost. You have a local region that you're looking at, and that's it. That's a way to make it easier. Or you could just draw and let your drawings begin from that place. So this is the 24th. You place your tool there, and then when you move down to even the 15 minutes, it doesn't change. This is 24th. This is where it began. So you could just take more cognizance of these points down here. The charts show the relationship between two things, price and time, is what we have here. It could be price and maybe number of citizens in the country. You could have that. So just pay more attention to what you have at the bottom of the screen. What is scalp trading? Scalp trading is very quick trading. Trying to get in and out of the market as fast as possible to make gains. So all the analysis we've been doing on the higher time frames, let's see over here. We're on the 15-minute time frame now, and this is a notable resistance zone. Resistance, 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 broken, turned to support here. This could have been a scalp trade. You take your position here, your target previous highs. So you do this long position. See, you got in here, stop loss just below the zone, and then you see here this is a 2 to 3 risk to reward. This is a 2 to a 3.5 at the very top. So scalpers are just trying to take quick positions like this. What would have made you enter this trade? What could have been a likely signal to enter for the buy there? Hope we're not lost. Trading view will find us. Okay. Data is loading up. The same issue over here. It's not network, it's just that trading view has limited the number of bars available. I mentioned at the beginning of the class. So I can't show for there, but I hope you get the overall picture of how that scalp trade could have been taken. just a quick trade based on TA or fundamental analysis as well. Okay, so let's see. Do we have any other questions? I hope I answered the questions. If it's still unclear, just let me know. So we'll look at that again. Okay, I'll take it out. Okay, understood. Beautiful. Yoko. Yeah, so let's see. I think that's all the questions. Market entry. Have your market or have your entry price in mind, and then just go. All the point of the analysis here is to find your preferred entry and then go for it. We found the preferred entry here, this zone up here, the 19.8 region. So you could just set 19.8 as your entry price and then wait for market to react from there. Please, I did not say go and put a buy order at 19.8. This is not a signal. This is not a trading signal. No, it is not. I'm just using this as an instance. So you'd have your entry region. You just go set the limit and then walk out. Can you use bearish engulfing or bullish engulfing pattern only to place positions on trades? You can. Combining bearish or bullish engulfing with other things like key levels of support and resistance or trend lines would help you take higher probability trades. Why is that? Because you could have engulfings that do not do anything in the end. Let's look for a few. You see it on charts. Let's see. Let's look for a few engulfing patterns. Over here, this engulfed this. This bullish candle engulfed the bearish one, and then we had continued price movement. Here, we had 1 second. Let me clear this. We had this bullish candle engulf the previous bearish one, but the upward movement was not sustained. We had a slight push and then a dump. So this zone over here is the middle of the road. There was nothing to justify buying or selling there. It was close to a resistance zone, but it wasn't at resistance. So you could have gotten some quick profits from there, but depending on your trading strategy, maybe moving your stop loss to entry after some point or something, you could have been knocked out still in the loss. I hope that answered your question. You can use engulfings. They are very, very, very beautiful patterns because they show that volume has come into the market. Look over here. It's very, they could fail, yes, but it's more likely to play out, especially on higher time frames. Look at this, and you see over here, this was an engulfing, and afterwards, continued bullish reaction. Yes. Any other questions, please? Any other questions? So since there are no further questions, okay, understood. That's great. The NFT king. Yeah, cool. I think that's it for tonight. We've been here for a while. I hope you actually learned some things tonight, and all my talking did not just put you off to sleep. So, thank you very much for coming. Thank you for.
I hope when I learn something. Make a talk. If you guys see your graph things today, this evening, make a talk. Not supposed even the clap. I just keep quiet. Hey, why did I do like this?
Clap here.
If I don't appreciate it, I don't get money. No, by this one though. Let's to.
The class was mad. The class was mad.
Make an idea. So also okay. How did you talk after? You guys should talk.
You learned something on the engulfing.
And okay, so for I think Joy. How confusing was the class for you? Joy.
Yeah, the class was very confusing. I think it's because I am just joining for the first time and I don't know anything concerning crypto trading and the likes of. But I know with continuous attendance, I'll be able to understand very well. But I was actually lost. I didn't understand anything. I just had to stay to the
It's okay.
Thank you.
And also this, the purpose wasn't for you to understand, just to see how the class is. The thing is, everybody started from 0. I started from -5. Some of you are starting from 0. I started from -5, and I still got somewhere. So everybody just has to start somewhere. So I assume this is, you have absolutely no interaction with crypto prior to this today, or that there are mechanisms or there are techniques you can use to maximize your capital in the space. There's no doesn't have to depend on luck. No waiting for it to go up. To learn speed, equipped with some tools that will enable you to be able to make money, basically. So just not just you, every other person, just persevere and keep learn. Actually, it's just time. It's just time. So no need for too much talk. So for those who are something, I don't know what to give. So I will just give to anymore. 1,000 at a time. So I'm just going to give Joy. I'm going to give Joy to encourage her.
Thank you.
So she no go wrong.
Thank you very much.
So I don't know who else I'll give. Every other person here don't owe for it. Yeah, so I don't know who else I will give. God's will, have you attended this class before?
No, this is my first time.
You sure?
Yes.
All right.
There was one Prudent in the class. I think that should be his first time.
I don't know, Prudent na old person.
Prudent is here. Prudent has been here.
Prudent done there before Abraham. So Gary, now my first time now. Wait, the third hour. All right, so I don't know one more person. Star Wars, Marvel. I don't think I've seen you in this class before.
This is my first time. I've been watching the recordings.
Okay, your first time. So this is your first time, is your lucky time.
Thank you so much.
So I'll give you one. All right. Every other person with the baby don't collect. Every other person I'm seeing here already collected something from me. Why are you guys like this? Not supposed to give me, but I see they collect. Is that what?
No, I'm seeing Caleb and he's saying he's new.
Yeah?
No, it's Caleb. It's Caleb. The guy that has won all the giveaways from BT in this life.
If I give Caleb elbow, make him not talk. Local man. Look at my, you won't give away, so I can't give you anything again. Give me a DM on WhatsApp with your phone number and network, and I'll send your stuff. Thank you for showing up again today, and invite your friends. And also, don't forget, we're also giving away, and I haven't seen, nobody has sent me any screenshot yet, too. $100 worth of trading capital up for grabs. Screenshot profitable. Best net will win $100 trading bonus. If you've won before, you're not eligible to enter the contest. For those who are trade testing, send me a DM with screenshot profitable trade, and you'll be entered. If you are the only person who could, who shares the screenshots, you win $100. All right. Good night.
Thank you so much for the class, Jerry. Good night, everyone.